Hey Dave, how you doing today?
I'm doing excellent, Nick. How are you today?
Fantastic. Rainy, dreary Friday.
Yep, yep.
It's going
As
to
opposed
be
to last time we did this, it was beautiful and sunny and probably one of the last nice days we'll see for a while. So today it's a little
right.
easier to sit inside and talk about finances, right?
Exactly. Yeah.
Yeah,
We
yeah.
apologize ahead of time if we go on for like an hour and a half today.
Right. Nothing else to do today. We might as well record something. Yeah. And so, we've been doing this series on our financial planning progress, but we're going to take a little break from that today to talk about a webinar we have coming up in a couple of weeks for clients and guests about ESG investing.
Yeah, so I know I personally am super excited about learning more about ESG investing. It's
Yeah.
something that's definitely gaining more traction. We're hearing more and more about it from not only an investment standpoint and people in the investment world, but
Hmm.
also clients. And, it's just kind of one of those things that's out there now and it's
Yes.
become mainstream.
Yes, for some good reasons that we'll talk about in a few minutes. Before we kind of tee that up and talk about what ESG investing actually is, it's pretty cool that we're going to be able to bring in a guest speaker for this webinar. His name's Apollo Lupescu, and he's a PhD in economics from UC Santa Barbara, but he's also a Michigan State University Broad School of Business graduate and is coming back to talk to. He'll be virtual, of course, but helping us put on an event for his old home, at least his college hometown, right?
Yeah, absolutely. Super
So
exciting to have him join us. He should be a great speaker and we're
yeah,
looking forward to it.
he's one of those. I've probably heard Apollo speak on at least four different occasions that I can think of, and maybe a few more if I count recordings and webinars. And he's just one of those people that was born to stand up in front of a room and explain things. So he's kind of
Yeah.
he's found his thing to be nerdy about. He's good at it, and he's good at communicating it. So I'm looking forward to just listening to him talk about this. But so we can talk about it a little bit though. And so what is ESG is probably what everybody is asking.
Yeah, I'm sure, most people have heard of it. Even fewer probably know what it stands for, and even fewer still kind of know what exactly that means when it comes
Yeah.
to investing.
So it's a philosophy. It's an approach to investing that takes into account environmental, social, and corporate governance aspects, in addition to the usual ways you pick investments.
Right. So, if you're building a portfolio, you obviously have parameters or philosophies that you follow in terms of, how you're going to select from you know, all of the stocks kind of in the universe and
Hmm.
how do you like break that down into what makes sense to invest in. And this is just like another screen for, okay, we also want to take into consideration environmental, social, and governance when we're building that
Right.
portfolio.
So the E for environmental is pretty obvious, taking into account climate change and carbon emissions and how a company's policies affect the world around us in an environmental sense, and what the impacts on neighborhoods and communities are.
Yeah, and I think this is one that, is super important, obviously, in something that's, with global warming and the direction and the trend of things. A lot of people are kind of confused at first because they're like, aren't all companies like taking part in this? Shouldn't everybody, be thinking about the environment that they impact? Like, are there companies out there that are still, ruining the environment?
Right.
And so the answer to that question is yes, there are, and I guess to some degree when you're putting together portfolios it depends on like the level of standard, like what is your
Hmm.
standard for environmental, because everybody has like a standard in terms of what are you comfortable, what are you shooting for as in
Right.
terms of the company and what they're, how do you take that into account, how do you set like your standard of, okay, you have to at least be meeting these criterias for us to
Right.
invest.
Right. And we're going to talk about approaches to implementing these ideas here in a minute, but like a good example is along those lines is it can be a relative factor, right? Like you might know you need to invest in energy, um, And, you look at the big energy companies out there, and some of them are proactively trying to change but they're still not, obviously an energy company is probably never going to be as green as, certain non mineral, I don't know what the right, I'm trying to think of an example, and I should have done that before I opened my mouth. But, there's a lot of companies out there that aren't going to have any environmental impact or negligible compared to an oil company. But, if you're going to invest in energy, it may be a matter of picking the relative best versus, just saying, I'm not going to have anything to do with energy companies because they're not green.
Yeah, absolutely. Or, car companies or, any like if you want to build your portfolio based on modern portfolio theory and
Right.
diversification. And then when you're in that area, like, okay, the S&P 500 X percentage makes up oil or energy. And so how do we pick the best energy companies when it
Right.
comes to environmental?
Right. So the S in ESG is for social, and that pretty much just boils down to is this company doing good or is it doing harm? In terms of the not just the environment, but in terms of the social aspects of the world. And Facebook is all over the news lately about how nefarious some of their policies are, and how they kind of know that they have a bad psychological effect on teenagers, and they know that lots of disinformation is circulated through them. And so the social aspect of how they handle that is important.
Sure, absolutely. And the example of, years past would obviously be tobacco,
Mm-hmm.
Philip Morris and, are they doing good or bad for the world? Are they, doing more harm than good? Facebook is a great example of kind of today's culture of, they have all
Right.
this information that they knew they were not doing, they were doing harm and, neglected to disclose it or do anything about it is kind of the current scandal out there. And so, what are we looking at in terms of companies and what they're trying to do and who they're trying to be as a company?
Yeah, yeah. And so then the G is for governance. And there we're talking about how the company is run internally, and really looking at whether the company's policies, is the company's board of directors, are their interests aligned with their shareholders? Are they being transparent? Are they, instituting anti corruption measures and following the rules?
Yeah, absolutely. And then, they're kind of, not only as it relates to the company's board, and who serves on that board, right? Is it,
Mm-hmm.
seven of the same exact person from the same exact background, or are there diverse backgrounds that can kind of really help govern the company?
Yes.
And how does it look when you look at like the executive management? Is it all, the same type of person that reaches executive management status? Or are they giving opportunities to minorities, things of that
Right.
nature, and kind of taking that whole look and approach at how the company is built and how it's run, and from the standpoint of who's in charge?
Yeah. Yeah. So ESG in general, I guess to sum it up, is really about, taking a portfolio management philosophy that tries to align your beliefs on these subjects with how you invest.
Right.
And there's really three different main ways to implement this kind of philosophy. The first one
Hmm.
that I think is obvious to everybody is exclusion, right? If you believe that smoking is a bad thing for society, then you might want to build a portfolio that excludes British Tobacco and Philip Morris.
Right.
So you
and
can.
and just to take that one a little bit further, there's a lot of different screens that you can do nowadays. It can become very sophisticated in terms of exclusion. So sometimes it's, based on religious beliefs, or,
Mhm.
there's, depending on where you fall, there's different ways to exclude, and there's different ways to kind of screen for these sorts of things.
Right. And then the flip side of exclusion is inclusion. And when we talk about that, we're basically saying, well, we're not going to exclude companies necessarily, but we're going to invest more in those companies that we feel strongly about. And again, if you're going to invest in energy, you might invest more in Dutch Royal Dutch Shell because they are, doing everything they can to try to switch gears and include more solar and wind and things like that along with oil production. It's about rewarding those companies, because really when you invest in a company, you're rewarding them with your dollars, right? You're basically saying,
Right.
just like going to the store and buying their products. When you buy their stock, everybody that buys their stock helps support that stock price, which is important to them as they run their company. So, um,
Absolutely.
you
And,
know,
as an investor, the flip side of that is you're an owner technically.
mm-hmm.
Not sure that you own enough to make a big change, but what you're saying is I believe in this company so much that I want to own a part of it.
Right. Yeah. Yeah. And you're voting with your dollars, so to speak.
Yeah.
Um,
Yeah.
then the third way is a little more direct version of what you're talking about there, and that's influence. So we've got exclusion,
Mhm.
inclusion, and influence. And remember, if you are the shareholder of a company, you are an owner of the company, and you have a say, even if it's a small one, in their policies and who sits on their board. So it's very, very hard on an individual level, or even on the level of, like, say you and I had got all of our clients together and decided we wanted to, elect somebody to the board of directors. That's probably not going to happen. But when you get a bunch of big mutual fund companies that are trying to create ESG focused funds, and their interests align, they can make a difference. And my favorite example is CalPERS,
Mm.
which is the California Pension Plan program. They're one of the biggest single investors in the world, and they are very proactive in focusing boards in being an activist shareholder and putting people on the boards whose social and environmental policies match their own, or match what they feel their constituents are.
Yeah, absolutely. Great example. Another example that we've seen and talked about on the podcast before is BlackRock and kind of what they're
Yes.
doing in terms of saying, hey, you guys need to, update your environmental policy or we're going
Mm-hmm.
to, not vote according to, voting people back on the board and that sort of thing and kind of
Yes.
withholding some of the things that you want to do as investors. We're not going to sign off on that until you do this.
Yes, and bringing up BlackRock is a great segue to the next thing we were going to talk about, because just general thoughts on ESG investing. It used to be that there was this perception of a trade-off, right? Where if you were going to
Mhm.
focus your portfolio only on environmentally, socially conscious investing, you were excluding a lot of companies, which whenever you exclude certain things from the portfolio, you can expect that you might miss out on companies that were good investments. But
Mhm.
I think it was in early 2020, right before all the coronavirus craziness.
Yeah.
BlackRock, which is one of the biggest asset managers out there, and Larry Fink, their CEO, he writes a letter every year to shareholders, and his big emphasis in early 2020 was the stance that if a company is going to be a viable investment for his clients to invest in over the next 50 years, they better get their act together on this stuff.
Yeah.
Basically saying, if you're a major company out there that doesn't care about the environment, you're gonna not exist 50 years from now, because people are not going to buy your product. Well, two things. One is you're going to destroy the earth, and
Right.
so there is no, like, long term investment for you, right?
Yeah.
And two, people are not going to buy your product. People are going to shun you, and that means you would not be a good investment for us, regardless of whether Larry Fink, as CEO of BlackRock, really cares about your social stance. He doesn't see you as a viable investment in the long term if you don't get your act together, and it's not in his
Right.
shareholders' interest to invest in you because of that,
Yeah.
because you're just not
Right.
going to perform well. And we've seen that shift. And it's funny, like so many things in investing, it becomes a self-fulfilling prophecy in a way, if you think about it.
Right.
If
Yeah.
everybody collectively decided to make environmental issues the driving force behind their portfolio, the companies that score well on those aspects are going to see their stock prices go up.
Right.
And then other companies are going to look at it and say, well, heck, we better get on that bandwagon and clean up our act so that people invest in us too.
Right.
And
For
and
sure.
so, we talk about the um, the market aspects of this. A lot of times I think you see a tension between the capitalist concepts, right, that drive our markets and drive
Hmm.
our economy, and the social aspects and environmental aspects of taking care, what economists call externalities, right? The things that don't get baked into the price. Well, you can do you can put companies in a position to do good within that system of the markets and capitalism if enough
Right.
people are on board with it. And
Sure.
that
Yeah,
that that
absolutely.
really interests me. So um, it'll be
Yeah.
interesting to see how this plays out. It's really catching on out there in the press, at least.
Yeah, absolutely. And I know, like, as far as when you look at ESG investing, there's a lot of money that's flowing into these types of investments. And
Hmm.
that's just kind of the start of these companies starting to pay attention, because
Right,
if they're getting screened out for ESG, they're not in those platforms. And so those dollars aren't
right,
going there. So they're probably already feeling some of that
right,
pain in terms of, where the flow of money is going right now.
right,
So that'll
right.
be
Well,
interesting as that trend continues.
yes, and the other thing about that as a portfolio manager and as investment guys is then the fund companies pay attention to this and they produce better products to invest in this way. And I think that's part of
Right.
the improvement we've seen over the last couple of years is that socially aware funds, as they used to be called, were very limited and somewhat expensive and kind of clunky to use. And you were always compromising, like the other part of this, and this is going to be an interesting thing to ask Apollo about, is how do you find what aligns with your values? It's one thing to just say
Yeah.
ESG, but so especially like the environmental, yeah, maybe we can reach consensus on that easier. But on a lot of social issues, people are all across the board, and so finding the approach that aligns with your personal value set is becoming easier because
Sure.
there's more tools out there now. So,
Right. Yeah. I know there's screeners for, Christianity versus,
hmm
Muslim versus so other religions that have different beliefs and
hmm
how those things are invested. And so I think you're going to see that continue to expand. Well, and I think that brings up a good point too, because part of the reason of, investing in ESG is about, obviously those things are important to you, but also when it comes down to like the psychology behind investing, if you have a portfolio that you feel comfortable in, as in, I'm not just investing in Wall Street and those guys are all bad. If you have a
hmm
portfolio where you feel good about those companies, I think it helps people kind of stick through it when there's fluctuations
yeah,
in the market, because it's not
that's a
like,
great
hey,
point.
it's me versus Wall Street. It's me versus,
Right.
I'm picking good companies and I feel good about these companies coming back. It's not just a
Yeah.
bunch of crooked guys on Wall Street.
Yeah. That's a good point. That's a really good point. So that's our 10,000 foot view of ESG investing. I really look forward to hearing Apollo put his abilities to explaining it. And like I said,
Yeah,
I've always taken
absolutely.
away. Yeah, he's just a good speaker. So I'm excited about this.
A good speaker, and probably rare for someone with a PhD in economics, right? We don't
Right.
usually think of
Yeah.
those guys as
Yeah.
good, great
They're usually
orators of
wearing
our
flip
time.
flops and basketball
Yeah,
shorts to the office, and maybe look like they could
right,
use a bath. But yeah.
right. So
So
yeah, that should be good. That event is October 26th at 4 o'clock. We will have a link to registration. So if you're interested in that event and want to register for the webinar, check out the show notes of this podcast at srbadvisors.com. And on a more broad feature, obviously, Dave, we work with a lot of MSU folks, and this is one where MSU used to have a socially responsible fund, one fund in their 401k lineup. But there are different ways that you can actually build out of your 401 or 403b through MSU, where you can build an ESG portfolio that maybe not a lot of our folks are aware of. So if that's you, if you're sitting in that boat and you want more
Mm-hmm.
information on ESG investing in your 403b or at all, feel free to reach out to us, info@srbadvisors.com. But most importantly, we're looking forward to seeing most of you on October 26th.
Great. Yep. That I think covers it, Nick.
Awesome. Thanks, Dave. It's been a
I'd
pleasure as
say
always.
get out there and enjoy the day, but given the weather, stay inside, stay warm, stay dry, and have a good
That's
weekend.
right. 'Tis the season. All right.
Yeah.
Thanks,
All
Dave.
right. Take care.